Good Monday morning and welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. We have a tale of two stories playing out in markets as investors race into year end. On the one hand, AI plays like Nvidia and Microsoft are back in rally mode. Then on the other side of this trade, historically more defensive areas of the market are ripping higher. Gold prices are now at another record. The same goes for copper. Here's what's on my mind as it relates to these two moves. First, AI stocks are broadly back in rally mode because why shouldn't they be? These big tech companies are likely to show, once again, the best earnings growth in the game when they report in late January. If you are managing money, do you want to be in a position where you're telling clients in a few months that you sold out of AI stocks in December for no real reason at all? No, you do not want to be that person. Then gold is rallying not because of fear U.S. economic growth will fall off a cliff next year, but because the Federal Reserve has pumped the system with a series of interest rate cuts and put further pressure on the dollar. And they may not be done yet on rate cuts. Bottom line here, it's okay to see gold and high beta AI stocks rise in tandem. There doesn't have to be one right answer, just one person's view. Here on the Opening Bid Roundtable, Tom Sosnoff, Lost Dog founder and CEO, alongside Yahoo Finance senior reporters Brooke DePalma and Ines Ferré. Tom, I'd love to get your thoughts on what I just dumped out there into the internet sphere on what is driving this AI rally into the year end.
Well, it's been an unbelievable year. And to this point, everybody that's been long AI stocks for the entire year, they've gotten paid. So I just think it's a lack of sellers. I'm not nearly as bullish as you are going into January, but for now, I just think it's a lack of sellers.
Why not? What gives you pause, Tom?
Just price. I mean, if you're, I've been a pretty active trader for a long time, and price is kind of everything. I don't really think about anything, beyond price. And sometimes you get to the point where you're like, hey, it just becomes a pot odds play, Brian. Where is there more risk? Is there more risk to staying long, or is there a better payout being short? That's all it is.
Is there underneath the surface of, let's say, Nvidia, Tom, and some of those well-known AI plays, are there other areas of the market in AI that are breaking down that are red flags to you?
No, not yet. I mean the small cap AI stocks are trailing a little bit, but not really. And there's a lot of stocks in the pipeline that also look good that might come out as IPOs in 2026. But for the most part, I think it's just the megatech. The megatech stocks, it's the big, too big to fail companies. And I think in that sense, that's where the real risk is.
Brooke, I mentioned here at the top that AI is back in rally mode. I called out Nvidia and Microsoft, but if you dig down a little deeper, it's not every one of these stocks have been rocking the past 5 or even 10 trading sessions.
Yeah, if you take a look, there are some companies that are definitely pulling back some momentum. For example, we do have Oracle moving higher today, up about 1.2%. But if you take a look over the month, it's down about 2% over the past 6 months, down about 5% as we make our way into year end. And also, in addition to that, to take a look at some of the players that did go public this year. Take, for example, we have another one like CoreWeave moving higher today, up about 3.5%. On the flip side, that stock up nearly 20% or rather the past month alone as we make our way into the end of the year. I think that investors are really trying to see how exactly they could still get into this tech rally, still find those spots that maybe have been underperformers as of late in fear that they might miss out. I think we're seeing a bit of FOMO as we make our way into the later days and the last few days of this year's trading sessions.
Speaking of FOMO, and as gold, I woke up this morning at 2:40 a.m. First thing I saw was a story on gold hitting a record price. I mean, go figure, this has been the year of gold.
Gold, silver, copper, you have had, precious metals have been on a massive historic run this year. They're on pace for their best year since 1979. That's for gold and silver. If you weren't in this trade, you are definitely, you've been missing out. The question is, going into next year, what's going to happen? You've got bullish calls out there. You've got Goldman Sachs that is saying 4,900 for gold by the end of next year. And very easily, there could be an upside risk to that because keep in mind that investors, private investors are still under allocated when it comes to gold. The question, though, is could this velocity, this big run that we've seen in gold, indicate sort of a downside coming. And I just, briefly spoke to Mike McGlone of Bloomberg, because he has this thesis that he's seen this scenario. He said, look, in 1979, we saw a huge, what bothers him is the velocity of this run. He said, we saw a huge run up and then gold crashed after that. So he is saying, buyer beware. But if you listen to the rest of Wall Street, you've got a lot of analysts out there that are still bullish on this precious metal as interest rates are expected to go down next year.
Tom, you think we're in a gold bubble? It feels like for the past 6 months we've been talking about an AI stock bubble. What about gold?
Okay, I'm glad you brought that up, because I've been trading gold all night long. Actually, started last night when the futures opened at about 5 o'clock, and I've been trading it straight through the night.
You're the man, Tom. That's why I always love talking.
I'm a little bit of a junkie, but I've been trading the gold silver ratio, which is all the way down to 64 right now, which is kind of the lowest it's been in, I don't know, probably a decade. But which just means, gold relative to silver. I think silver right now is more overpriced than gold, and silver's been in more of a crazy hyperbolic move. But gold's back up, to pretty much to new record highs. Last time it got up to these levels, it crashed pretty good, about, like 10%, 11%. This time, I don't know. I'm a contrarian, so I'm short gold here. I'm short silver, and I'm short silver versus gold. So I think that, again, this becomes another one of those plays where if you want to play the trend to the upside, we're at record highs. I mean, if that's the way you think, great. But I like fading these moves. And as a contrarian, I like the downside here of both of those. I think they're just grossly overpriced.
What takes down gold, you think, Tom?
Just they run, gold's like any other commodity, and I don't know how much you trade different commodities, but they all kind of trade the same way. Eventually they just run out of steam and the buyers dry up, and there's not a lot of shorts in most commodities, so there's not a lot of buyers below like there are in some stocks. So I think the only thing that really turns gold around this point, it's not going to be some macro thing. It's just going to be that the buyers, whoever's pushing this up, and all the trend players, they're just going to run out of bullets at some point.
What does the market have wrong for next year, Tom? We're seeing a lot of these bullish forecasts come out, as usually the case. I mean, you're not going to hear like a Goldman Sachs come out and say, hey, we expect the market to fall 20% next year. But what is everybody missing?
The only thing people ever miss is that you got to remember that nobody really knows anything. So what people are missing is complacency. And you just have to judge you have to think about your investments, and you have to think about the way that you position your portfolio just based on extremes. And right now, the extreme is in the complacency world. It's not in the opportunistic world. That's just the way I look at it.
Brooke, let me get back to, we'll stay on gold, because is the move in gold translating to some of these gold miner stocks, whether it's Newmont Mining or even Freeport?
Brian, what I'm taking a look at is steel, aluminum, and copper. And the impact that gold's having is we're also seeing record highs within those three as well. A bit of a pullback this morning, but really it all goes back still to that AI trade, because as we build out these data centers, we're taking a look at wire. That's going to move copper even more. We're taking a look at aluminum, steel, steel in order to build out the structure behind these, and then aluminum largely to build out those cooling racks. And so it really just all goes back to this build out, this next phase within this AI, as Dan Ives likes to call it from Wedbush, this AI revolution, and how all these different commodities plays are going to play into this momentum behind AI, and how exactly that's going to look as we move forward with that, and really the next phase of this build out going into 2026.
Inez, I can't wait for this moment of truth when all these companies, they're all going to report earnings in late January, early February, and the market's going to be so excited. Inez, maybe we should all be contrarian like Tom.
Yeah, look, I am really pleased to hear Tom's view, because I've heard few views like that. I just mentioned Mike McGlone's from Bloomberg that is more contrarian in this, and he's a bull, though. But nevertheless, there is something that there's this sort of thesis about the central banks that have been buying gold, and whether central banks are moving away from treasuries, diversifying more into gold, and they are sticky buyers. And then Goldman also talking about the ETF inflows, and so it's interesting to hear this contrarian view of where gold could go, or that you could see it drop off significantly from these record high levels, because you have everyone else that is sort of getting on you should have been on this boat. And by the way, this is a structural move that is going to lift these gold prices higher going into 2026.
Tom, it's not a chat for you and me if I do not ask you about options. What are you trading in the options market right now and why?
Well, I mean, I'm primarily an option trader. I mean, that's all the technology we've built in the last, 40 years has all been, derivatives, futures and options technology. In the option world right now, we're about, because volatility is so low, we're about equal trading, listed equity options and also futures and commodity options. But I mean, the public hasn't moved that far away from the biggest liquid names like Tesla, Nvidia, and that group, and basically the top 10 tech stocks. But in the commodity world, gold and silver are hot. Crude oil just started to pick up a little bit. I mean, we are very active right now in the bond market. That's the one market I think is cheap relative to the other markets. So on the 30-year and on the 10-year, we're starting to like those markets now because relative to everything else, those are the cheapest things I see out there.
Tom, outside of this, you and I haven't talked for a while. It feels like yesterday, but we haven't talked for a while. And this year has been a year of really major new innovations in the financial services ecosystem. I'm going to have an interview soon after this with Circle CEO Jeremy Allaire. He's pushing out there with stablecoin. Like, what do you think about this rapid pace of change in the industry?
I mean, personally, I love it. I mean, we're building our own digital ecosystem, launching a stablecoin also because I think that, the change in payment rails and the future of digital ecosystems are going to be critical to all the stuff that, everybody's building in the fintech world. And we're clearly going in that direction as well. So my favorite thing about 2025 was just the expansion of new markets into into a digital world, into also an event-based world, which we kind of like, just the explosion in growth. And of course the continued, just the move from stocks to derivatives has been something that's just been fun to watch.
Ines, let me go off to you real quick. It has been when I was researching Circle to talk to Jeremy, I follow the company, but I was really surprised to see the stock, almost cut in half relative to the IPO. And Jeremy made a very good point. He's like, we shouldn't be put in a box. We shouldn't necessarily trade with crypto, but that's what seems to have happened to Circle post its IPO.
Yeah, and Circle is working on so many infrastructure plays that it's just that it shouldn't be put in that box, and it is just because of what's happening with Bitcoin. Circle had an enormous run from its IPO and into the Genius Act in July, and yes, it's been sold off. But look, going into next year, what will be interesting is to see how Bitcoin plays and how all the rest of crypto plays into next year. There are some more sort of cooler calls out there when it comes to crypto going into next year. There's also some prominent voices, some prominent bulls that have sort of cut their exposure because they're saying that they're not expecting that it's not going to be a crypto winter as long as some prior crypto winters. But nevertheless, going into the first half of next year, you even had Sean Farrell coming out with a call of 60 to 65. He says he's not a bear. He's definitely a bull, but he just sees some headwinds and a better buying opportunity later on. So with some of these equities, there may be also a better buying opportunity. We'll have to see.
A good way to kick off the week with this roundtable. Tom, happy holidays, my friend. Always good to see you. Brooke and Ines, I will see more of you, I imagine, this week. Coming up, it has been a big year for Circle CEO Jeremy Allaire. The company had a successful IPO, and President Trump signed the Genius Act. I sit down with Allaire to get an inside look into his 10-year vision for the stablecoin leader. Longtime stablecoin proponent and Circle co-founder and CEO Jeremy Allaire sees a future where Circle's technology is embedded in the very fabric of the internet and wider financial ecosystem. Here's what Allaire told me exclusively in a new drop of my opening bid Unfiltered podcast. Enjoy this one.
I think to bet against the U.S. economy I think is challenging. There is no better economic system in the world right now than the U.S. system, and so the real question is the debt sustainable? That's a reasonable question. And look, I'm very much of the view that you have to deal with both issues, meaning you have to deal with the amount of spending and you have to deal with the amount of tax receipts. And actually, the fastest way to grow tax receipts is to grow the economy. And so I think a focus on growth in the economy and on bringing in investment into the country and on investing in the strategic industries that are going to fuel that growth is critical. And I think we're seeing that happen. It's a timing question, right? If you were talking to Secretary Besson, I think he'd say something similar, which is, we're going to get productivity gains out of this incredible investment that's happening in AI. And this is sort of the AI bubble discussion as well, which is, when does that happen? But me sitting here as a technologist looking at it, it seems very clear that over the next decade, we will see extraordinary productivity increases in the global economy. Yes, the U.S. economy as well, and U.S.-based companies will benefit from this massively, but we're going to see these productivity gains, and productivity gains drive real growth.
It doesn't sound like you're worried about an AI bubble. If we're going to get this much productivity because of AI, there's no bubble here.
I don't know. I mean, look, bubbles are a natural phenomenon in markets and in technology cycles.
And tulips.
Well, in the industrialization of the world economy over the past couple hundred years, right? There were many bubbles in railroads, bubbles in electricity, bubbles in so many other things. And look, the amount of investment that's happening for these 5 to 7 to 10 companies, if you count China and everything else, right? Is not everyone's going to win, right? So you're going to have some winners, you're going to have some losers, et cetera. But the real question is how quickly does the infrastructure unlock economic velocity? And so I'm very focused on that, and we're very focused on that. In fact, it's critical to Circle strategy because we believe that economic OSs, like what we're building with ARC, we're designing those for the agentic economy. We're designing those with the assumption that over the next 3 to 5 years, a huge amount of the economic activity, the work, the labor, the coordination, the value exchange that's happening in the world will be executed by AI and will be executed by AI agents. And we need a different paradigm, a different economic infrastructure paradigm for that. And we're designing for that. And 3 to 5 years, you could have a bubble burst before that. Yahoo has lived through multiple bubbles as well.
And now we're rocking.
Yeah.
We're rocking here.
Yeah, no, that's great. And the internet bubble, kind of there was overspend on CapEx, and then it got absorbed as the technology got better, and you could do a lot of the things that people thought you could do in 1998 that you actually couldn't do. You could do them in 2004.
Look, you've been doing this. You founded the company 12 years ago. Clearly, you saw something happening down the line. Maybe I ended on this. Where is Circle 10 years from now? What is your vision?
Well, I think I hope that we're part of operating a major new infrastructure layer of the internet that we are building and operating, but I view what we're doing as something that it involves a lot of stakeholders, that involves a lot of whether it's developers or infrastructure companies or financial companies, like that we're building something that is running a substantial portion of this new economy, that the new economic activity that is natively running on the internet and is natively running powered by AI and is this extremely high velocity economic system that we are foundational to the infrastructure of that. And I really would love to see that. And I believe that in 10 years that these new forms of money that we've been involved with, stablecoin money, and now the sort of these tokenization more broadly, but that these new forms of money and assets are a much larger part of the total amount of value, financial value in the economic system. And ultimately, we want to help create applications and utilities that make the financial world, at least, safer, more global, more innovative, more inclusive, and higher velocity. Like, I think our mission is to increase global economic prosperity through the frictionless exchange of value. And exchange of value is a concept that people often hear and they think, oh, you're talking about payments. Well, no, I'm actually not. Like, value exchange is I am in a labor contract with you, and I'm going to work for you, and I'm going to give you my labor, and you're going to give me income. Or value exchange is I'm going to sell you this product that you need to build your product, and there's value exchange, right? Value exchange is I want to borrow from you, and you're going to lend to me. There's so many types of value exchange. Or value exchange is I'm going to invest in your project and be a stakeholder in your project, and as the project generates returns, I'm going to get a return as well. So there's so many types of value exchange. We want to see, frictionless value exchange at a scale that we have frictionless information exchange and frictionless communications and frictionless commerce and frictionless software distribution. We want frictionless value exchange, and that can happen in 10 years. And because I think that can happen, and it can have the same kind of, like in these other areas of the internet, these sort of like million X increases in the output of the thing, the amount of communication in the world, the amount of information in the world, the amount of software in the world. It's like 1 million times larger than it was before the internet transformed it. So the amount of value exchange that can happen in the world, I think, can like million X. I don't know exactly what that looks like, but it can like million X. And that, what that should mean is that global prosperity has increased, that we have played a role in driving economic velocity. And as I like to say, economic velocity is the lifeblood. It is the core of growing prosperity. And so that's what we're trying to do. We want to play a big role, and I view Circle as a company that we really want to work with everyone. And so hopefully something like that will emerge.
Well, I will just say this before I let you go. I encourage all viewers and listeners of this podcast or vodcast, whatever you want to call it, go back and read Jeremy's letter on the prospectus. These are the types of founders you want to get to know, the ones you want to trust and bet on. I mean, Jeremy is one of the most trusted people in this industry. Go back and read that letter. Take notes. Hit me with some comments. I'm curious on what your thoughts after you read something like that. Jeremy, Larry, thank you for joining us here. I appreciate it.
Coming up, Julie Hyman has you covered on market catalysts. We'll be right back.